Dave Zagel here with our fourth video on tax structure. We're talking about an overview of federal taxes and where the money comes from and how the different programs work, things like that, to help people get a better understanding of the federal tax structure and where where the federal government gets its money, and looking a little bit at history as a guide to how things have gone and how they might continue to go in the future. Today, let's talk about Social Security and Medicare tax. And we're going to lump the two together, even though they are very much separate programs. There are a lot of similarities in terms of them being programs to help people later in life, and also where the tax money comes from, with most of it coming out of payroll. So circling back to our very first video where we talked about the percentage of the revenue that comes out, or the percentage of revenue that that Medicare and Social Security make up of the total revenue that the federal government takes in. And in 2018, as our example year, Social Security took out basically 27% of that total pie. So out of the whole $3.25 trillion that the federal government brought in, about 27% came from Social Security, and a little over 8% came from Medicare. So between the two, you're looking at about 35% of the total tax receipts of the federal government came in for those two taxes. Now, if we look back at some history, that percentage of tax revenue has bounced around a little bit. Let's start with Social Security. So here's a chart of Social Security as a percent of the total revenue that the federal government received. Interestingly, you can see here in the early 80s, it was the lowest that it has been the past 40 years. In the early 80s, you'll see it ramped up. There was a deal signed by Congress back then that made some changes to Social Security, where it actually tried to put it in better position. So it's now bringing in more revenue, but it also it changed the retirement age. So it used to be 65, and then they changed that to 67, and it is getting phased out over time. And to this day, it's still getting phased out. Soon it will be age 67 for everybody who's coming through getting ready for retirement. But it started that phase out that long ago. It was planned out this far in advance. So those changes back in the early 80s have caused Social Security taxes to be a larger portion of the overall pie from the federal government tax receipts. Now we can see there's been some ups and downs over the years. And going back to the very first video where we talked about the economy really being the biggest driver of how much money the government takes in overall, what we find is in better economies, what happens is the government takes in more revenue from especially individual income taxes because the economy is going strong. But when a recession hits, on a percentage basis, we can see that here early in the century and then again in 2009, 2010, because the total revenue drops so significantly in terms of the amount of money coming into the federal government in individual income tax receipts. The payroll taxes, the Social Security and Medicare, make up a bigger percentage of what the federal government is receiving. So even though I understand it's a recession, people are losing jobs, and that's all true, there's still enough people employed, and there's enough of a drop in individual income taxes due to the recession that the Social Security and Medicare taxes start to make up a larger percentage of the total receipts. And then again, as the economy heats back up, more gets collected from individual income taxes, and as a percentage of the total, Social Security and Medicare drop back down to, I hesitate to say more normal levels, but that more average of what they tend to be. So if we look at the Social Security or the Medicare chart, It looks pretty similar to Social Security. Obviously, the percentages are lower, but it has risen over time, just the same as Social Security has on a percentage basis. There's just been some different changes to the Medicare program over time to where the Social Security line looks a little bit flatter than the Medicare line, which continues to increase. Part of that is because not only does Medicare tax come out of a paycheck, but for many high income earners, there's a portion of their individual income tax where they have an additional Medicare tax that they must pay. But for the most part, all of these taxes are paid through payroll taxes. The total tax percentage that gets taxed is 15.3% of gross payroll. Now there are caps on that each year, so it's not infinite. It doesn't just keep going. There's a cap on an income level that gets adjusted for inflation over time. But for the most part, it's going to be 15.3% of payroll, where half is paid by the employer and half is paid by the employee. So that's where the federal government gets its tax money for Social Security and Medicare, with a small piece coming from the individual income tax returns of higher income folks. And in general, the Medicare has ranged from, let's call it 7 to 9% of the total federal government receipts. And Social Security has ranged usually in the 25 to 30% of total federal government receipts. If you have any questions on that, please reach out to me, give me a call, shoot me an email. I'm happy to explain this further and hope this helped give you a good perspective on Social Security and Medicare taxes and how they fit into the total tax receipts of the federal government.